What's up, y'all? It's Mike in the building. Today I'm going to go over my July update for my net worth. I skipped June. It was just more of the same. Uh, yeah, we are still in a world of pain. This is my Robinhood portfolio. So you can see things aren't looking great. Um, we'll just dive right into net worth. I have a couple things I want to go over. So if you like finance videos, like and subscribe. I've been doing them less, to be fair, but I want to try and keep on doing these at least monthly. At the beginning of the month, go over the net worth, talk about catalysts, and kind of like what my strategy is for my two uh, viewers that actually pay attention. Thank you guys. So cash, just got a couple hundo, checking savings, and my investment account, a little over 40K. That's probably going to be very consistent for a little while. My home last appraised at 165. It's probably similar. It might be a little higher now, but I like that it's kind of like the official I have there. I'm sorry, some lights on. Personal property car, really, they're not going to fluctuate that much either. Stocks and crypto have been fluctuating a lot, as well as my Fidelity account. Stocks showed you that, so the numbers might be a little different. I did this, I think, either this morning or yesterday, but it's staying kind of flat, but it's only because I'm buying in every day, and values just keep going down. Crypto has been abysmal for a number of reasons. I think a lot of it is what I'm hearing is like liquidations and a lot of margin being flushed out of the space. A lot of problems with liquidation in different exchanges. Yeah, there's been a lot of names in the news recently, and it's definitely a little scary. I guess if we're on the crypto topic, I had a line that I really wanted to pay attention to. It was I think, like 19.8, yeah, 19, about 19,800, and I was watching it around here. I think right around this slip, which might have been the Celsius news. Yeah, so there was like one, just a lot of bleed out there, and then I saw this, and I started getting kind of nervous because if it doesn't hold this, I mean, 20,000 is kind of the like the mental line. I can't think of the word for it, but there's something there where like people will just kind of draw that line in their heads. The 20,000, and the line I had was very close. I just based it off of other lines of support and resistance in the past. I don't know if I can pull them up. I don't want to get too in the weeds with the TA. But yeah, there was some resistance there. It looks like that's a lot of what I based it on. The other big thing that people talk about with Bitcoin is it's never fallen below its previous high, and by that we don't mean the 69K. We mean the high before that, which would have been like, I think that was maybe why I drew that line, because it was the previous high, and it did. It fell through that line. Has not happened in Bitcoin's history. Our lowest, our new recent low is 17.5, which is wild. So I have a feeling it's probably going to drop further because it's kind of tied in with the stock market these days, and I feel the same way about the stock market. I don't see a light at the end of the tunnel quite yet. Um, and we'll go through some of the reasons why I feel that way and why I think the market kind of agrees to some degree. Um, but nonetheless, I'm going to get into my strategy more later as well. But nonetheless, I'm still buying crypto. These are Bitcoin, Ethereum, Cardano, and Atom. So to finish up with the net worth, so that was crypto. Yeah, I've invested like around like 6-7 on that. Fidelity's sitting at 86. At that account's high. I think I was close to 110. So that's a little painful, but I'm not touching any of this money for a while. So, long-term investing makes a lot of this stuff a lot easier to stomach. I've got my mortgage. Slowly paying that down. It shot up after I did the refi, sitting at 126,000. So assets minus liability, and then I have that accounts receivable that I've mentioned before. Um, so all that included, sitting at about just over 200,000 my net worth. So I actually dropped 3.25% or $6,700 roughly from last month. So that on the graph here. Yeah, I mean, you're seeing the obvious trend. It's not surprising. But yeah, I mean, it's even though it sucks, it still is kind of interesting to see it this way. So yeah, so that's the net worth thing. Still on the downtrend. My spending hasn't changed drastically. If anything, it's probably been about the same with prices going up due to inflation and just trying to watch my spending, trying to spend a little less. Excuse me. So I want to go over. I guess we'll do upcoming catalysts next. So keep an eye out for, maybe write these down. June 8th, we have the jobs report for June. I'm going to reference these as I go over a couple other things. June 13th is CPI data for, I'm sorry, July 8th is the jobs report for June. July 13th is the CPI data for June. That is your inflation data that the Fed's going to look at, and they're going to take that into account when they're figuring out what their next move will be. Very likely another hike. We're going to go over what the market is pricing in as far as how large that hike is going to be. July 26th to 27th is when their next meeting is, the FOMC meeting. That's when they're going to make that decision, and they usually announce on the second day, so that would be July 27th. So markets are definitely going to respond to that. A lot of this is going to dictate. It's going to have impacts on our mortgages, and cost of borrowing money for, say, a car, anything like that. And it's gonna continue to intend to slow the economy down, which I guess that segues nicely into my next point. So it seems like inflation is not coming down as easily as anyone had hoped. So I think it means that there's another aggressive move from the Fed. Market is pricing in 0.75% hike in July. See 83% here for a total federal funds rate of 2.25 to 2.5. The current one, I had it open, I think it's like 1.75. So yeah, it's always a range, and that range increasing by 0.75. So that's what it looks like the market's pricing in. So that's going to definitely impact our mortgage rates. Sitting at 5.7 according to Freddie Mac as of today, on the 30-year fixed rate mortgage, 5.7, which actually came down a little bit from 5.8. I think, if I'm not mistaken, that might have something to do with the bond market. To be perfectly honest with you, I'm not sure exactly what that relationship is like. I should probably research that a little bit, because I think that has an impact as well. So yeah, with another 75 basis point hike from the Federal Reserve, we want to keep an eye definitely on the mortgages, or at least I want to, because I plan on eventually investing in second property, and this is definitely important, especially if you're considering refinancing or purchasing your first home, purchasing property. Another thing we want to keep an eye on is Fed has basically openly said that they're kind of trying to push it. Like you're basically stuck with either a recession or just high inflation inevitably. So I think it's important to kind of keep an eye on this as well, the unemployment. Okay, wait, so this is actually backwards. So this is employment, not unemployment. Oh no, these are. I'm sorry. This is unemployment. That's what I thought. This is confused. So unemployment looks like it has been descending since the beginning of the year. So I'm curious to see if we're going to start seeing an inflection of that number where we might start seeing this go up. Just because um, with higher costs to borrow, companies are forced to cut costs to, you know, make sure that their basically like their earnings per share is at or near expectations. So they're not necessarily investing as much, so they might be cutting costs, which could lead to layoffs. We've already seen that. Hearing a little bit about that. Hopefully, we don't hear more about it, but it seems like that's probably going to be happening. So I wonder if we're going to start seeing that number go up, and that would be, I guess, indicative of a recession. There's been a lot of talk about that as well. Um, it seems I think we're in the middle of one. I mean, technically, it's 2 quarters where GDP not grow. Um, we've already had one in first quarter of 2022, and I feel like every estimate I've seen has been adjusting closer and closer to zero. And I'm wondering if by the end of the quarter and we start seeing earnings season kick off, which I actually don't know when that starts. Probably be, the quarter's ending today, so sure we'll be entering that season soon, getting a better idea of where we stand as far. Covered that one. This is just the 10 to 2 year Treasury yield curve. We inverted one time in April, which I thought we did again. I guess we didn't. Historically, this has been a fairly accurate predictor for recessions. So that's why people are kind of talking about this every once in a while, just keeping an eye on it, kind of dancing around. We're pretty close to zero here where it inverts. So something to keep an eye on. The employment, mortgages. I'm not going to go into that too much right now. And then I just wanted to shout out the financial resource guide that I've been slowly adding to. Um, it's just going to be a free thing I include with the videos and try and mention it whenever I remember. And whenever I'm just looking at stuff and I find an interesting resource, I just add it to the list and try and organize it the best way I can. It's far from complete. I don't plan on ever necessarily completing it. If there's something that you think belongs on here, let me know, and I'll definitely look into it and probably just add it. Um, I used it for all the tabs I pulled up to just kind of get a feel for what's going on. It's nice to just have everything in one place. My cousin recommended the SEC.gov site for I think the thing is called Edgar, which is an acronym. I forget what it stands for, but it just allows you to look up. It's an easy place to find earnings reports. Um, uh, just type in the ticker or the name of the company you're looking at. It's just a nice one-stop shop for something like that. So definitely could be useful with the upcoming earnings season for companies you're looking to invest in or you're already invested in. So I think that kind of covers all that stuff. So I guess I just wanted to kind of go over my strategy briefly. So I've been buying consistently since the beginning of the year. Um, every market day, I have different stocks that I buy a tiny piece of. And my kind of like thought process or how I'm putting up with with losing all that money as like it's literally just setting it on fire is I have a separate notepad that I look at, and every day at the end of the day, So I'm buying, 3 or 4 stocks daily with a small amount of money. But I'm just dollar cost averaging those. Especially I've always wanted to own Google, but I always felt like it was, just a lot, really really expensive and always like really highly priced. But everything's been so beaten up. I've been trying to take advantage of that and buy into things that I've always kind of wanted to own and just never got around to or thought the valuations were high. But also simultaneously still trying to stay true to my index funds. At least one of those slots is usually to index funds. But what I do is at the end of the day, I look at how many shares I own of whatever I'm buying compared to what I owned yesterday and what my cost basis is. So that's how I kind of stay engaged and still want to invest because I see my ownership in a company going up and I see my cost basis going down, which is a good thing. So that's how I try to stay positive with this stuff, and I've just been buying every market day. Um, with crypto, I buy once a week. I buy 3 to 4, depending on kind of what my financial situation is looking like lately. I've just been wanting to kind of catch up on some bills and just hoard a little bit more cash and like contribute to my savings. So Bitcoin, Ethereum, and then usually the third slot is Cardano. I bought some Doge the other day. I don't really know why, and as Atom. So, and I bought a hardware like a cold wallet or a hardware wallet for cold storage for crypto, but all of my stuff is kind of in different places. Like I feel fairly safe because I have small amounts everywhere. Like I have stuff in BlockFi. I was grandfathered into the interest uh, earning account, so I don't really want to take it out of that. I'm in Coinbase. I'm in Binance. I'm in I think Crypto.com. I'm just in a bunch of different exchanges, which is good because if something happens to any of them, hopefully it doesn't. They don't all go down, but I have that wallet if I feel like I really need to move things around, which I feel like was a good investment, and I still might just end up doing that. Just a little tedious with all the spots that I have the money. Um, yeah, other than that, I think that's really it. Besides just adding to a savings account, my short-term goal for that was to have 2K as a emergency fund. I'd like to get that to like 10K. And then after that, maybe just keep contributing to it or just putting extra cash into Robinhood just as uh, money on the sideline for good deals. And keeping an eye on real estate stuff too. So let me know if you find this helpful, and what if you have any kind of predictions. Let me know what your strategy is. I'd love to know if anybody else is buying along with me this year because it's definitely a brutal year. But I think if you can stomach it and you're not putting more in than you're willing to lose, I think it'll probably pay off pretty well within the next 5 years. Certainly in the next 10 years. Um, and take advantage of the financial resource guide. It's a little bit of a mess right now, but there's certainly useful things in there. And if there's anything that you feel belongs in there and could also be helpful, let me know. Yeah, until next time, I'll see you guys.